Good morning, good afternoon, good evening, whatever time of day it is, wherever you are. Welcome to today's grain market blast. It is finally Friday. Quite how it's the 20th of June, I'm not quite sure. Answers on a postcard, please. But you join myself and the glamorous with a capital G, Angie Setzer. Well, Angie will be providing us with a rapid roundup of the latest pricing flows and market moving news in agricultural markets. But before she does, because I do forget occasionally and I get a slap on the wrist by Angie. I'll get the legals out of the way. So as usual, nothing discussed in this space of session constitute trading or investment advice or infers any kind of endorsement by PIQ, myself, Ryan Paisley, or indeed the wonderful, the glamorous, the amazing Angie Setzer. Angie, how are you, my darling?
What up? If
What up?
you, my brain, doesn't believe that today's a work day. It's like, no, honey, it's Sunday.
Well, this is it for you guys. Yeah, because obviously yesterday was the synthetic Saturday for you guys.
Yes. Yeah. I'm not really sure. It was weird all day. Not gonna lie. Just kind of one of those days where you're like, wait a minute, I should be working, but,
And you
I'm
almost
not.
feel guilty for not working, right?
Yes. Yeah, I did. I really did. Like, and then I joked and joked on myself, honestly, where I was like, remember like when you worked for someone else? This would have been a 4-day weekend.
Yeah,
Like
yeah,
if I
right.
were still employed by someone else, I'd have been like, guess what, girls, I'm out on Friday
Yeah.
too. So like, you're gonna have to handle it, but you don't get to, yeah, anyway. So no one tells you that part when you're like, guess it's time to start my own company, that it's like, well, I guess you don't like
No
free
days
time.
off.
Like, that's what it is. So congratulations. But anyway, welcome to the Thunderdome. It is a Friday, all day, they tell me. And then we have another weekend. So market wise here, corn's just starting out up a couple on the new crop. Beans are up 4. Wheat, rallied really hard on Wednesday. So kind of backing off just a skosh down about 4 cents here to start the morning. And so gonna bounce back to my little bullet points that I sent over to you this morning on what we're paying attention to.
Yeah.
To me, the biggest thing that I'm watching right now is kind of more in the way of grain flow, and what happens to get the end user engaged. So what we talked about on Wednesday morning, one of the things that I think was supportive to the wheat market is that we're starting to see, cash prices, offers into the export market, into the global pipeline, reach last year's lows. And so as a grain buyer, anyone with, half a capacity to kind of be like, okay, what should I be doing to manage my risk? You're looking at this and thinking, all right, well, last year at these prices, this was as good as she's gotten. The thing that is most interesting, right now and in the grain market itself, in the physical market, and I think has been part of the reason why this thing's kind of just languished, is that you haven't had an end user that has really deeply been engaged. They haven't had to be. Basically, all you have to do is call up the person that supplies your grain and say, hey, I need some grain. And they're like, cool. We'll have it on its way. It's going to be this price, right? That fit? Yep, cool. But now we're starting to see where the farmer is getting, a little less engaged in this market than what we've anticipated. You're seeing that in Brazil and in Argentina. You're hearing stories in Brazil right now of exporters that if they really wanted to get aggressive into this market, and try to compete and really kind of push supplies into the pipeline in a big way, like we would need them to see, they're going to have to basically do it at a negative margin. To get the farmer convinced to sell, it's too lofty of a price. And so you have this bit of a standoff in the cash market right now, that is eventually going to be broken. And I would say at this point in time, the risk is it's going to have to be broken by the end user, though obviously the end user is anticipating big supply. We're still waiting for the Brazil bushels. We're still waiting for the Argentina bushels when it comes to corn. We've got wheat in the northern hemisphere that's going to start to flow into the marketplace. And so the end user has been right to wait. However, they've waited to where they, are going to have to make a decision here, poo or get off the pot sort of deal where it's going to get cheap enough, but you're going to have to get engaged. And now we're seeing issues. Wheat quality problems are starting to pop up. And so if you were an end user for wheat, if you're a wheat miller, and you're thinking, gosh, this stuff's going to continue to get cheaper. And all of a sudden you're starting to hear that the availability of milling quality wheat is a lot less than what was anticipated. You are not going to be a happy camper. So we're going to have to watch. Yeah,
So
go
on
ahead.
this, also, is there an element of like Mexican standoff where all these people
Yes.
have been waiting are like looking for the first
Yeah.
person to like hit the bid button?
It's The Office right now. Like everyone's got the gun, that one where all three of them are with the finger guns. That's where we're at, where it's like
Got you.
the end user thinks the farmer is going to have to puke before much longer. The farmer is of the mindset that I can't realize this loss, right? You don't realize the loss on the grain, which everyone's producing grain right now around the world basically and losing their ass. And like in any trade, like you don't really realize the loss. Yeah, you're losing your ass, but there's still a chance that something could change if
Yeah.
you hold on to that physical supply. And so that's one of the things that you're starting to see. Argentina farmers selling slowing down. Brazilian farmers selling is slowing down. They're switching over to moving soybeans instead of corn counter seasonally. We're seeing the U.S. compete in soybean exports. Soybean export sales were great. Corn export sales for old crop, still great. We're over half a billion bushel above where we were a year ago on corn
Oof.
export sales. And the USDA is expecting a 350 million bushel increase. We're like 200 million bushels above where we should be. Now people will argue that like we're not going to ship it all. No. Yeah, we'll probably roll forward a good portion of it. We'll also have a pretty delayed harvest by the way things are looking here in the Eastern Corn Belt. So having said all of that, I am watching grain flows more than anything. I want to see if the end user starts to get engaged. I want to see if you hear more about tenders going on, if you hear more transactions, if you start to see more in the way of exporters struggling with negative margins and things like that, because you're going to have to put a carrot in front of these folks. And I think the speculator has front run this market on the idea of seasonality entering the grain markets. But what they need to realize right now is the farmer has less than half of what they had on hand a year ago to market, at least across probably a good portion of the Northern Hemisphere. China's over 95% sold when it comes to old crop corn. The U.S. farmer's probably close to 90, if not closing in on 95% sold when it comes to old crop corn. Last year, the speculator could sell the piss out of this thing as we went into July and into August because the U.S. farmer and the Chinese farmer were both holding on to the majority of their old crop supply still. They had to puke. They didn't have a choice. Harvest was coming in. At this point in time now, the speculator's trying to hold this position for 3.5 months. And really when it comes down to it, it's the end user that's likely to be caught short in this because their only job is to keep feeding their beast. Like the farmer can wait forever, not forever, but a lot longer than what your end user can in a lot of
Right.
instances, at least this year. So that'll be one of the things we're watching. Obviously, we'll have geopolitical developments. President Trump said we have a 2-week window where he may or may not decide to join in on the targeted attacks in Iran. Israel has basically said, yo, we're going to do it with or without you.
Yeah.
That's a U2 song too, by the way. I hope it's stuck
Yep.
in your head now.
Oh God, thanks for
And,
that.
it'll be one of those things we have to pay attention to. Russia did warn today that this would be opening a Pandora's box if they attacked Iran. If the U.S. participated in the attack of Iran, I should say, or however you want to clarify that, which I found was interesting. I mean, and I've said this all along, like to me, obviously you have the direct implications of Israel and Iran that we have to be paying attention to and what it looks like if the U.S. gets involved. But we also have had, this really good relationship, I'm using air quotes, but, a relationship or a relationship reset with Putin, with Russia, with the U.S. and Trump. You've seen Trump really kind of lay low when it comes to pushing for peace in Ukraine, though you have seen Russia say they want a third round of talks, even though at the same time they're like, but you guys have to give in to all of our concessions, and Ukraine's like, that's not happening. So there's just, over the weekend we're going to have to see if President Trump changes his mind on the 2-week time frame, the element of surprise. I don't know if we'll do it before the season finale or not. I'm not sure when that is scheduled. But we have a whole level of all of this that, is built up and that we'll be paying attention to. Lastly, or thirdly, or whatever, we have trade deals or Schrodinger's trade deals, right? They're there, but they're not
Yeah.
there.
Exactly that.
Japan said today, like, they don't care about the deadline. Go ahead, charge us more. We're not going to give up. We're not going to just give you whatever you want. Go ahead. Kind of the EU has said that where it's like, all right, whatever. Like, we're not just going to scramble to get a deal done before the end of the time. Like, we have our retaliatory package if we need to. Go ahead. And so, I think too, you saw Powell on Wednesday, very, very clearly be like, yo, you get rid of the tariffs and I could probably cut rates. Like,
Yeah.
pretty damn simple.
Well,
It's
yeah,
not hard.
Yeah, and do you know what? Funny enough, that's come up this morning on the Morning Blast to do with Michael, and we said, it was quite clear that Powell is very much saying that. He's like, look, I will cut rates, but first I just need some clarity on what the fuck's going on.
Right?
Excuse my French.
Yeah. No, I mean,
And,
it's really one of those things where it's like, are we
and
going to be,
you
go ahead.
can't blame him, right? You can't blame him
No.
at all because monetary policy in terms of rate changes, it's not a it's not a speedboat, it's an oil tanker, right? This is decisions that are made. If they do move rates, that takes a while to filter into the economy, then it's filtered, it takes time for these to have impacts. So they can't be reactionary decisions to make. You can't be like just spinning on a sixpence. I don't know if
Yeah.
you guys don't have sixpences, but over here they'll spin on a sixpence. But so I've got a lot of sympathy for central bankers at the moment, because they are caught between a rock and a hard place, because if they're seen to be overly reactionary, they're going to lose all credibility. I know there's going to be people
Yes.
screaming at me now saying, "Oh, they haven't got any credibility anyway." But I
I know,
think,
you
to
gotta
be
love it.
fair,
Yeah.
I think he's done a very good job considering what he's had to deal with. So yeah, I think he's exactly right to sit on his hands for now and and say, look, give us some more clarity, and then we can make informed decisions. I know Waller's just come out, Fed's Waller has just come out before we came on air, saying, oh yeah, I think the time's right for a cut now. Be mindful that what he's saying is definitely politically driven, because it's been very
Pick
obvious for a
me.
long
Pick
it's been very
me.
obvious for a long time that Fed's Waller is desperate for Powell's job. Trump's already a fan of him, we know this. He will say
Yeah.
anything to get Trump to then publicly back him for the role.
That's
So
just
be
it.
be
Mr. Trump,
mindful
I
of that.
think you're super smart. That's
Yeah,
Waller, at this
yeah.
point. He's just the
I love
smartest.
your
And
hair
that's
today.
right. And so, I mean, I think that's important to recognize, like, central bank policy hinges on two very important factors in an economy, right? Your consumer prices and the cost at the retail floor or whatever, you know what I mean? Like what your consumer is paying and what they have to spend, yada, yada, yada. And employment. And that's what Powell said in his comments, where he's like, all right, we're at 4.2% unemployment. It's a great place to be. Consumer prices have fallen, though they've stabilized recently or whatever. Like, that's a good place to be. In reality, leaving rates unchanged right now does make sense to a certain extent. Most of the uncertainty that's coming into this economy, whether you want to admit it or not, is not driven by the increase in rates. We know how to handle those and how to mitigate the risk that comes with that. We don't know what the F we're going to be paying for import tariffs and things like that. We don't know what the business climate looks like as we move forward. And it's that simple. And I'm sorry, you can hate me if you want to, but it's
Yeah,
math, the math ain't mathing. So that's where we're at. We got the Powell, situation. We've got all of those other things. We're obviously going to be watching weather too as we head into the weekend. There's talk of, mitigating temperatures or moderating temperatures. That's probably a better word. Moderating temperatures. We're going to get a pretty decent heat wave here, coming in over the week and into the weekend, or over the weekend into next week. Temperatures in the mid to upper 90s are pretty darn hot. Especially, for some areas, like you've got some mud, you've got some, areas that have had a less than ideal start. And so the heat is needed. Like, don't get me wrong. Like, you can definitely tell, as the heat has come in here across our area, like the crops are just, you can almost hear them just be like, this is nice. So we do need some heat. But we have to be careful that the heat doesn't stick around for too long. There is some
yeah,
signs that it could come back in early July. It's going to carry forward into the end of this month with some less, than normal rainfall in some spots. And so just something to be paying attention to, as we move into the next week. Will be the last full week before the June 30th report, which will be a big dog. And, yeah, woohoo. Happy Friday. We'll see what the weekend brings.
exactly. I echo that. Happy Friday indeed. Angie, thank you as always for another fantastic week. Listeners, I know we always say it, but we really do appreciate you listening in and your feedback. Whatever you're doing today and the weekend, stay safe. Keep it tight. Much love, and we'll see you all on Monday.
Have a good weekend, guys.